You have lived this repeatedly, and you've experienced the calls coming from outside the building, beyond the FOMC, to do something. And we've heard plenty of those calls. You've seen them too. From the likes of Alan Blinder, from the likes of Bill Dudley, from Mohamed Al-Arian saying this Federal Reserve needs to get a move on. I want to pick up on the last one. Mohamed Al-Arian, the point that he's made is a similar one that you've made, Jim, is that this Federal Reserve seems to have become more data point dependent and not data dependent. Can you just explain the distinction and the importance between the two?
Yeah, I think if you say you're waiting to the next meeting because you want to see some data between now and the next meeting, that makes markets wonder, okay, well, what is it that could derail a rate cut between now and the next meeting? If you do react to that data, then that's kind of data point dependence. And I think that's what Mohamed Al-Arian has been talking about. One thing that I did often say when I was on the committee was that, if you know you're going to do something with 100% probability at the next meeting, why aren't you doing it at this meeting? And I think that often gets the committee into a little bit of hot water because sometimes the data don't cooperate between this meeting and the next meeting. So it can be managed, but it's kind of a committee dynamic that's been on and off over the last decade or more.
This is the reason why many people, including Mohamed Al-Arian, say the Fed probably is not going to cut rates today by 25 basis points, even if there is a consensus that they're going to in September, because they haven't telegraphed it and it would disrupt markets, saying what do they now think that they didn't think at the last meeting. However, Liz Young, we were also talking to James Camp of Eagle Asset Management. They're suggesting the Fed could set up a 50 basis point rate cut in September. Are you sympathetic with that?
No, I think that's too much. What I do think could happen is that they'll get going in September, but the discussion will turn to what about November? What about December? What will the pace be? Chair Powell said that this first rate cut is consequential because it starts a process. What is that process? And if the data continue to confirm disinflationary trends, I think you could bring November onto the table, and then you could have a sequence of rate cuts into the first part of next year, and then the committee could assess at that point where they are and how they want to play it from that point.
Do you feel like they've backed themselves into a corner in some ways by being so data dependent, by just repeating that sort of de facto to every question?
I don't know. This is a pretty successful policy here. Output growing, between 2 and 2.5% on a run rate. That's very close to the potential growth rate for the U.S. economy. Unemployment coming up ever so slightly as they predicted. Inflation coming down as they predicted. There's a lot to like about this. And the last piece of the soft landing would be to get the short end of the curve down and get rid of the inversion of the yield curve. So to do that in an organized way without signaling that you're worried about the economy, because I don't think they are worried about the economy right now, is really the trick here.